please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. So we are set to start with a bit of a gap up. Now keep in mind we did not participate on Friday when the markets did well. And today also, while the Hang Seng is down, but a couple of other markets have done well, and there's still some bit of catch up that the SGX Nifty is doing. Also keep in mind that the futures rate, 10,146, is where the Nifty futures ended. So about 40-45 point gap up is what the SGX Nifty is indicating. Ashwani Gujral, Sudarshan Sukhani and Mitesh Thakkar now join us. Good morning, gentlemen. Ashwani, the somewhat start was not auspicious, and I remember you said on Monday that you said on the somewhat day that on Monday you would be looking to actually sell Bank Nifty if there's a gap up. We are getting a 40-45 point gap up on the Nifty if the SGX Nifty is to be believed. What would be the first trade on the Nifty and the Bank Nifty then?
Well, good morning, Anuj. See, the key point is to not get overexcited this time, because last time it was a GDP problem and the whole market went down, etc. This time it's a three-bank problem, which is SBI, ICICI, and Axis. So that way, this is a more limited problem than last time. So while if we open around this 10,180, 200, the first trade is short. But I would think there is a possibility and a strong probability that shorts again get trapped and the market is not able to go down, maybe even below, say, the Muhurat day low, because you have global markets which are hitting new highs, and it becomes very difficult unless you have real big sustainable news to move lower. So Bank Nifty is also getting closer to now supports. 23,800, 850 will provide some amount of support, so that people should keep in mind. And maybe post the early morning weakness, you may actually have a second half where things look much better.
Okay, so the first good morning, Ashwini. So the first trade is short, but you would cover it quickly if you see recovery.
If I see the rest of the market on the other side, Reliance, etc., start to outperform, then all of these banks don't have it in them to push the market a lot lower. That's my point, that given that we've had three excursions to 9,700, this time an excursion to that point looks unlikely, and chances are we'll recover much more quickly and probably follow the global markets on the upside.
Fair point. Good morning, Sudarshan. On Thursday, you told us that you would rather wind up all your longs. I mean, that was your initial advice. And then you also recommended a short.
Yeah, good morning, Lata. I recommended a short in the Bank Nifty.
Yes.
And said we'll step aside and close the long positions in the Nifty. And it was a long weekend, wasn't it? And today, everything has changed.
Okay.
Markets are back to where we started from, pre-Diwali, pre-Muhurat trading. If you have closed your long positions in the Nifty, I think you should go back and buy the Nifty again. So the trade is go long in the Nifty. Luckily, we have a very tight stop, 11,140 for the cash Nifty. So I would be again a buyer in the Nifty, go long in the morning, close my short positions in the Bank Nifty. I'm not buying the Nifty Bank because there is nothing to buy there. But I wouldn't like to stand there in front of a Nifty rally and be short. So it's a very simple trade. Be long in the Nifty, be flat in the Nifty Bank, and a stop is 10,140.
Okay, that's interesting. So two of our experts are refusing to be sort of cowed down by the weakness we're seeing in banks. So some of the problems that we've been discussing. Mitesh, good morning. Let's get your sense in. Long or short? And actually just explain that to us both in terms of the Nifty and the Nifty Bank.
Good morning. So I'm more inclined to trade on the short side, but subject to certain confirmations. I think, the Bank Nifty, if you look at the last 3 months of data, which is starting from the weekend of July, last weekend of July, I think it's been doing a range of about 25,000, give and take 50-100 points to about 23,900, again give and take 50 points on the downside. My sense is that I think once this bigger range breaks, we'll get a better directional view. And today it looks like that we might break on the downside, if not immediately, over the next 1 or 2 weeks. So I think I would want to see the 23,900, 850 support being taken out. I think Ashwini also highlighted that support. If that is being taken out, go aggressive short. Otherwise, you keep trading on a day-to-day basis, which is a different scene altogether. Similarly, on the Nifty, 10,100 to 120 is an important gap support area which happened on the 13th of October. There was a gap up. I think unless until that is being broken, no point going aggressively short on the Nifty. So wait it out, play stock specific basis. But if these two levels are being broken, 23,850 on the Bank Nifty and 10,100 on the Nifty, then I would be clearly inclined and aggressively inclined to trade short.
Okay, that's interesting. Let's discuss individual stocks then. Ashwani, a mix of buys and sells for you?
Well, since the early morning, I expect some amount of decline to happen first before, at lower levels there is short covering. I think telecom continues to remain extremely strong. So Idea on any decline, that's a buy with a stop of 88, target of 100. Reliance is a buy with a stop of 900, target of 935. And on the sell side, I think PSU banks will continue to face pressure. PNB is a sell with a stop of 134, target of 122. Reliance Infra is a sell with a stop of 458, target of 440. And BoB is a sell with a stop of 138, target of 126.
Fair enough. Thanks, Ashwini. Mitesh, your buys and sells?
So I have 3 buys, 2 about 2 sells. Federal Bank is a buy. It had a good pullback on the motor trading day. I think 122 was the breakout level, 120, 122. So keep a stop at 119. Look for a 134 kind of rally. Bank of Baroda features in my list also on the sell side. Okay. Sell with a stop at 137.5. Targets of around 127 is what I would look for. I also have a buy on National Aluminium. Buy with a stop at 82.5 for targets of 92. And Torrent Power, I think while I've given a short-term buy, it looks like a very strong stock on the medium and longer-term charts. But for the time being, buy with a stop at 239, look for targets of 270. And finally, a sell on Maruti where the indicators are now turning negative. So I would sell it in the range of 77.50, 60. Keep a stop at 78.30 and look for declines to about 7600.
Okay. Ashwani, just to extend the Bank Nifty argument, what about stocks like HDFC Bank, Kotak, IndusInd, and Yes Bank? HDFC Bank and Kotak in particular, last week also actually made new highs.
See, that's the point that at 23,800, the stronger part of the Bank Nifty is likely to push its weight on the upside. And, this SBI, ICICI Bank fall didn't start 3 days back. It's been happening for the last 15, 20 days. It was just being counterbalanced by the stronger banks. And that's the expectation given the good global backdrop, etc. The stronger stocks will likely see buying at lower levels and hence absorb the Bank Nifty weakness.
Fair point. We should be getting Sudarshan's strategies in just a minute. A technical glitch there, but oh, he's with us. We will, for the moment, yeah.
I was just saying that while we were waiting for Sudarshan, I had a question to Ashwani as well. Ashwani, on telecom, you've chosen to go with Idea today instead of Bharti. What is the view on Bharti? Do you think there'll be a pause after this massive run?
See, once something gets out of a 8-year, 10-year consolidation, then there are very few pauses, regardless of how small or how big the stock is. We've seen what happened with Reliance. So while, 1 or 2 days, anything can have a pause, but you will see that even on weekdays, because nobody owns telecom. A bull market is created when nobody owns a certain stock. So given the hatred towards telecom, Bharti will continue to move up, even as people tell us how bad the telecom market is.
Fair point. Okay, we will also concentrate a bit on, okay, we have Sudarshan with us. Okay, well, thanks Sudarshan, good to have you back. What are the stocks you are trading?
Well, we are buying the Nifty anyway, so I'm focusing on mid-caps. There are buying opportunities in mid-caps and they were not even affected by the Diwali Muhurat decline. So Adani Enterprises is giving us a bullish pattern. I think there's a buy not only for the day, you could actually carry it for a few days. Oro Pharma has been a favorite. It's been outperforming the pharma sector. It's now willing to go much higher. Take a positional trade, take a swing trade here. Don't restrict yourself to a day trade for both of them. And finally, Jubilant Foods. Somebody is eating those pizzas, Lata. I don't know who, but the stock is going up relentlessly. It's a worthwhile buying opportunity even at current levels. Again, a positional trade. 2 quick short trades, NMDC, where iron ore prices are softening again, and I think there's much lower levels coming, and DCB Bank, which has been a strong underperformer, a distinct underperformer. So you can go short because markets could be choppy or little sedate, but focus on the buy ideas.
Okay, focus on the buys. I guess that's the bottom line then for this morning, gentlemen. Thanks so much. Do stay on with us. We'll, of course, keep coming back to you closer to market opening. For now, let's also focus on the primary market action because it's yet another IPO making its way today. So, Indian Energy Exchange is going to be listing on the exchanges today. Anisha is joining in with a lowdown on this company. Anisha, I was looking at some of the details. So, I think the trailing price to earnings multiple is 40 plus. You know, we live in a season of, I think, high valuations. But what is this company all about?
Well, yes, the valuations are really punchy, and that's the reason I'm expecting a tepid listing. So if you go by the market expectations, it can be a flat to just a 5% gain type of listing. Now, the issue also just got sailed to it was oversubscribed just 2 times versus the subscription frenzy that we have seen in the recent time. And also remember, during that subscription period, there was a controversy that came up regarding the lack of clarity whether the foreign investors can directly invest into this particular company or not. And that is why they had to cut down their anchor investors almost to half. So if, in fact, that might as well play on the minds of investors. Now, the valuation table should come up for you on the screen at 1650, which was the price range, higher end of the price range. It is 39 times FY18 PE. Now, you're right, we have been seeing such kind of PE multiples for other exchanges as well. But if you compare it to other emerging market power exchanges, this is very expensive, and that is what Ambit is saying. They are saying it is 70% premium to the other exchanges, and they consider the valuation to be punchy. On the other hand, we had Centrum that said that the listing gains are possible, but most of the brokerages are taking it to be a long-term play, because remember, this is a very steady business. Now, the Indian Energy Exchange is basically the contracting of the next day or next few days contracts of energy over the exchange. They also deal with renewable energy certificates trading as well. Market share, if you look at their core business, that is pretty high, but in the entire scheme of the power business in India, it is still very less and still in single digits, so that needs to grow up. So the scalability is huge, and right now, even if you see the last 4 years, the way they have grown at the 15% CAGR, whether you talk about revenues or the volumes or the profit figure, the return ratios are very high at around 40%. So yes, a stable business, good scalability, but you can't ignore the valuations. That itself is a bit punchy. Back to you.
You know, that valuation plate you gave us, 38 times, 39 times, these are FY18 or FY17?
That is FY18, Lata.
Okay, so it's still forward, then it's then they have to deliver. But yeah, you know, lately there haven't been so much of PPAs signed, and therefore a lot of spot buying has happened. That may work in favor of this exchange. But thanks a lot for that, Anisha. We want to just go back to the overall markets for a bit. After posting a good 18% return in summer 2073, the Nifty started summer 2074 on a subdued note. CNbc TV 18's Nimesh Shah caught up with Ramdev Agarwal of Motilal on Diwali Day, began by asking him what he thinks of the market, how earnings have looked so far in this quarter.
See, the right now going is very good. I mean, whatever you can say, economy is looking up, earnings momentum is building up from this quarter itself, and the flow of domestics are really buying this time, and foreigners are also getting scared of selling anymore. So I think the mood is very good, so valuations are a little high, but mood is very good and flow is very good. So I think the companies which are going to do well, they are going to be saluted like never before. So the earnings will be respected, and stocks will see higher prices. Index movement, because of mixed earning scenario, might be much more calibrated in the sense that maybe another 10%, 15% kind of gain. But stocks will go up big time.
Over the last few years, your investments have been quite transparent through your Focus 35 fund. And I see some of those small pharma companies getting added into the portfolio. Jubilant Life, Eris Life, a couple of other stocks are added. Ajanta has been your favorite. What is your view on the pharma space?
So we are optimistic on the pharma because one is that it's a very secular industry. So Eris and all, they are like for the local consumption, you know, and they are new companies, very energetic entrepreneur. But another opportunity is the global pharma, in the sense that global generics, which Indians are able to produce very high quality at a very, very reasonable prices. So that opportunity is very large, and we think few companies like, newer company like Ajanta or Jubilant, who makes it there only and sells it. So it's a very good space. In last 2 years, we have not made that much money. First round, we made money in Ajanta, but we lost money in Lupin. We lost money in Sun. But I think this industry is not down and out. It's taken a breather. It will again take off.
Okay, so market veterans are giving us their call on the new year that has kicked off. On that note, we'll take a quick break. More market talk lined up ahead with Vikas Khemani of Edelweiss Securities.
back. An important set of fundamental cues that the market will have to negotiate are the commodity cues. Manisha Gupta is back with us. Manisha, tell us all. I guess supremely important are the crude cues.
Oh, well, yes, $52 for the US crude and 58 holding now for the Brent crude oil prices. So we have seen good gains in the previous week, and we are trading nearly 0.5% on the higher side in the Asian markets right now. And everywhere that you look, you have positive fundamentals coming in, whether it is the unrest in the Middle East, where you have the oil facilities in Kurdish in Iraq being targeted, and that's adding premium to prices. If you look at the US markets, the tightening cues coming in from that are supportive. The Asian demand is expected to be robust as well, especially when you look at the Indian crude imports as well for the month of September have been at record highs. So nearly 4.5% up year-on-year basis and 19% up month-on-month basis. And that also is clearly adding to the gains in case of the crude oil prices. But the markets are expecting that you would see a spike coming in before this year ends, and brace yourself up for nearly $60 a barrel for the Brent crude oil prices as well. While the prices may not stay there, but you are looking at a spike perhaps coming in for that one. Another set of cues, of course, comes in for the gold prices. 2-week close on to that one, as you have seen the US dollar index jump up versus the Japanese yen especially. We are trading at a multi-month highs for the US dollar. There are various cues coming in from US and Japan as well in sense of the monetary policy going forward, and that's keeping the currency markets quite choppy, and that in turn has led to the precious metal prices decline in Asia today.
Okay, Manisha, thanks a lot for that. Vikas Khemani now joins us, President and CEO of Edelweiss Securities. Vikas, good morning. Happy New Year to you and your team. What do you think is in store for this Samvat? Last Samvat was good for portfolio investors. Do you think this year could be similar?
Hi, Anuj. Happy New Year to you and your team and your audiences. I think last Samvat was definitely very good. It started with low expectations, and I think it delivered much better than what people expected from the beginning of the Samvat. And I think this time around it is completely other way around, that we are starting on a reasonably high expectations. To that extent, I think you have to reserve your sort of what delivery would come in. But at the same time, I do believe that we are in a structural bull market. We are, and all the pieces what you need for rally to continue are in place. Of course, short-term minor corrections might happen here and there due to short-term news or developments. But broadly speaking, the structural reforms, impact of structural reforms is behind. I think we have made a nice sort of consolidated base for growth to pick up from here. I remain quite positive. We will be in election season. To that extent, I think spending will get accelerated. So I think we will see the impact of all this effort being made in last couple of years start panning out slowly and steadily. So I remain quite positive. Obviously, one has to remain cautious about pockets of excesses getting built, which happens in every market, and one has to be, but I don't think it's a very big worry at this point in time. Structurally, I'm positive.
Okay. Well, Vikas, good morning. But corporate lenders are not going to be part of your portfolio, or will they?
I think corporate lenders, still the pain continues, and we've been sort of expecting it to sort of settle down. But as it happens, I think by and large the provision is more or less getting done. Now it could be 1 or 2 quarters more away. But I think, and if you see within the corporate first, and I think because and people who the banks which do not have at all retail exposure would take some time. So I would say if one has to play contra play, one has to play with the likes of ICICI Bank or Axis, where the retail portfolio is also reasonably large. As and when this provisioning pain is behind, I think they will do well. I do believe that by and large it is behind. But we've seen in Axis results that surprising rise in that as well. So maybe it's 1 more 2 quarters. But this also can coincide with the economic uptick in the activity. Like we are seeing some sort of improvement in the power sector of late. This could add, this could probably reduce stress in the time to come in the sector. So I think as economic activity picks up, you will start seeing this kind of easing out. Risk reward definitely has started favoring in favor of some of the corporate lenders as well.
That's a really interesting point, Vikas. So you're willing to go contra and actually buy the pain at this point. So that's an interesting thought. But then how much pain should an investor be willing to take? Because what we saw in the case of Axis was straight 10% cut, 10-11% already. We don't know how banks like ICICI will deal with this divergence issue. What even maybe some of the other lenders like HDFC Bank will have to do with respect to recognition. Till now, we thought the recognition part is over. Now the stocks were underperforming because of delay in resolution. But your sense on more recognition pain ahead?
So as I said, that I think by and large issues behind. I'm not saying that it is over, and it is around the corner. And a lot of times what happens is that when the economic activity starts picking up, you will start seeing some sort of turnaround or resolution also taking shape faster. Let's take steel. Some time ago, steel was under big stress and it was considered as a very, very big challenge. Now I think we are seeing a lot of resolution in sight, and I think in next 3 to 6 months you will see quite a bit of positivity on that, and some of the resolution as well. So and I am quite hopeful of reasonably all-round uptick in the economic activity, and as and when that happens, this stress will start reducing. No doubt, you might have 1 or 2 quarters of more pain. One cannot predict that, but at the same time, I think risk reward of sector seems to be falling in place, especially when the corporate banks, where you have a reasonably good mix of retail as well as corporate exposure, where retail is anyway growing, and as and when the corporate starts bleeding, you will see a reasonably good return coming through, and most of these stocks are underowned at this point in time. So that makes it again a classic case that as and when things turn around, they will deliver good returns.
Okay, talking about under ownership, because we have seen a decent rally in telecom stock, and we've also seen return of IT and pharma. Is there anything that you're buying in some of these sectors?
I think on a selective basis, we are positive on pharma. Where valuations are in favor, the filing pipeline looks good, and so on selective basis we've been looking at the stocks and sectors. IT, we are more positive on the smaller caps, smaller companies than really larger companies, because I think larger companies will still have some sort of challenges for the growth and a lot of issues to deal with. But I think on a smaller mid-cap IT, I think could probably end up doing well. So yeah, telecom again the sector we believe that best thing is to stay with disruptor rather than people who are going to go through the pain because of this disruption. And while we have seen some sort of relief and respite, still the consolidation is not over. We think better to stay with the disruptor than anybody else.
Okay. Well, we want to ask you about the big NBFC sector. It's so many sectors within it itself. But before that, Vikas, our colleague Abhishek has joined us to tell us what the street is expecting from Indiabulls Housing. More on that from you in a minute. But Abhishek, what's the street expectation?
Stable set of numbers is expected on Indiabulls Housing Finance. The loan growth has been between 30 to 35%. Anything over there will be positive. Last quarter, it was at 33%. Spread at and above 3.1% will be positive. Last quarter, it was at 3.24. Steadily, it has been maintained between 3.2 to 3.25. Now, gross NPA has remained stable. Anything below 0.95% will be positive. Last quarter, it was at 0.8%. Motilal Oswal has an estimate for Indiabulls Housing Finance for the quarter, and their polls suggest NII up 34% on a consolidated basis, while net profit after minority interest to be up 21%. What will be the key thing to note is how the net interest margins will pan out later, because NBFCs have benefited from the cost of funds, but also there is pressure on yields as banks have been reducing their lending rates. Indiabulls Housing Finance in the last few quarters has focused on affordable housing scheme, so how that also pans out needs to be seen closely. Back to you.
Okay, thank you very much, Abhishek, for putting those numbers into perspective. Because housing finance, I mean, have they had their run and enough now, or you will still buy more?
That housing finance as a sector has a long way ahead. Just to give you some sense, Lata, before we kind of conclude that, of course, the stocks have rallied and they have done very well, but I think there's a huge unmet demand still, and this is just begun. I mean, today our housing finance outstanding is at the industry level is about 14 lakh, 15 lakh crore, and according to our estimates, in next 8 years by 2025, they will go anywhere between 6 to 65 lakh crore. Now you can sort of figure out whether it is done or it is a lot more left, because I think and especially when there's a focus on affordable housing, government is going all out to make sure that the housing for all by 2022, and as the per capita income rises, people will upgrade their houses, people will take more loans. So I think this is nothing. I think we have long way ahead, and it will be probably, wrong to say that, it's done and, yes, more companies will get created, more companies will grow. Stock specific, choice cannot be ruled out, but at the same time, at the industry level, I am very, very positive on the sector.
So, Vikas, and what should be the best portfolio construct right now? And I'm talking for someone, I mean, obviously not a day trader, someone who's looking at the next couple of months. Will more money be made in sticking to stocks like a Bajaj Finance or an Indiabulls Housing Finance, NBFCs? Or is it better to play contra now, some of the IT and pharma bets, or maybe even telecom, as we discussed?
Well, again, that depends really on your risk appetite, your horizon. I mean, in portfolio construction, many things go. But if I were to, let's say, speak from a medium-term to long-term perspective, and I'm assuming a long-only investor for long haul you're looking at, I think financial is one segment which you have to have in your portfolio, because any economy cannot grow without commensurate growth into credit, and hence, and we are also sort of in the middle of financial inclusion drive, credit offtake. We have still not seen credit to GDP ratio is very, very low. So we'll all see that will go through. So I think amongst the domestically focused stories, domestic growth stories, financials remain, in my opinion, the top pick. Followed by, again, very significant, transition India is going through in terms of investment cycle, both into infrastructure and private capex. And in my opinion, if you take 3 to 4 years, both of them will give a significant wealth creation opportunity. Today, we are talking about spending huge amounts of money in railways, urban infra, affordable housing. All these things are going to create opportunities in many sectors. And mind you, these are not just words. Many of the people say that it has not happened. It is happening while we are talking, and they will further accelerate from here. So, in my opinion, you should play the investment cycle over the next 3 to 5 years, and you will have many multi-bagger ideas, big stories, big wealth creation opportunities in this segment. So, I would say broadly these two. And other than if you are looking for some sort of hedge or balancing out a portfolio, hedging against the domestic economy, then you could look at IT and pharma, which are more in terms of hedging in nature. But I would put my big money or big weight or big risk on domestically oriented stories, because I am a big believer that over the next 3 to 5 years you will see huge amount of uptick in the economic growth.
Okay, Vikas Khemani, it's a pleasure listening to you. Thank you very much for giving us the flavor of the times, as it were. It's not a one-day fall on Samvat Day that investors should look at, but at the broader picture where the India growth story is intact, and therefore domestically focused companies is what Vikas is saying. We have to take a break on that note. We are going to come back. We will have the pre-opening rates. We are also going to be joined by Vinod Sharma of HDFC Securities for some FNO strategies.